Hey everybody, this is Calvin Waite. I trade crypto for a living. I'm not a registered or licensed financial advisor, planner, or broker, so nothing on this channel should be taken as a recommendation to buy or sell. I also trade all of these things, so I probably have a vested interest in there. But there's plenty of entertainment value and lots of education, so this will be awesome. For those of you who didn't know, my subscription channel is live. So look at the link in the description over at cryptoinfluencers.com and you can see how I make all of my trades and what I do and what I think about everything. This channel is for more hypothetical and looking at trends, and the other one is for actual trading. So you might be interested in that. Hey, good Tuesday to you all. I really was debating on whether to even do the video because in 45 minutes we're going to have our daily close and our monthly close. So it's almost like almost a little pointless to do that because leading up into the monthly close, we've seen some big moves and this could go up or down really hard. So, but this is kind of my only big chance. The kids haven't made it home from school, so I've got to take advantage while I can to see what's going on in these charts. And it's getting a little hard to read. We're definitely at a critical decision point. I've been thinking about it for the past few weeks, and really it's been a nail biter this whole time. Just quick reminder that cryptoinfluencers.com is my home base. This is the free channel. This is the paid one in case you're interested. And tomorrow we're doing our live stream. So Wednesday 12:30 Mountain Time is when I'll do a live stream if you guys want to join, and I'll just talk about markets and whatever, and then you can ask questions, and sometimes that creates a pretty fun conversation. So that would be great. Well, without any more hesitation, let's look and see what our market is doing. I mean, I'm not sure. So yeah, honestly, by the end of this video, or by the time it publishes, this whole setup could be completely different. But let's go straight to the monthly and just see what kind of a month we are looking at. And so far, our month is creating a doji candle with a rejection off of the 50-month moving average. So I don't really expect us to move too far. To recapture this, we'd have to go to 23,600 in the next 40 minutes. That's probably not going to happen. So we are officially looking at a monthly reversal, which means March would likely, this is just a game of odds, greater than 50% chance that March is red, and the most logical place to find support is here. 20,440, yeah, 450. This is the most likely place to find support. The market will do whatever it wants to do. We can only kind of interpret it as we get data. So this is where we're at. We struggled with the 50 here. We hit a high of, let's see, this close, was like 23,300. We closed this month at 23,150, so about $150 difference between these closes. And this close is right between them. 23, we're ranging between 23,200. We might be between the 150 and the 300. I don't know. So tomorrow we'll have exact numbers. We can see how this goes. Ethereum's close, we had a major bullish engulfing. There's really no resistance here. All we have is, in fact, Ethereum's printing a support candle because we had support flipped to resistance right here. I'm gonna have to go just a tiny bit up with this. It's right close. It's really close. It's kind of amazing to have an open, a close, an open, and a close all, this is, yeah, 7 monthly candles, and 6 of the 7 is touching this pretty much on the candle bodies. So definitely a toss-up. Ethereum looks like it has support off this line. So if Ethereum was independent, this would be pretty bullish. I know it could be interpreted as a doji as well. I mean, this could be a reversal, but where we've had a similar touch on this line for many months, this almost feels like a struggle, but an attempt to actually break it. So it's not black and white. So, but yeah, Bitcoin's a lot more obvious. This one does look like a reversal to me. So it's kind of where we are at on the monthly. On the daily, we're doing something that I don't really like very much. Now this is a small formation because it is, I mean, this is just a few days, right? But we do have kind of reverse cup and handle forming, and that is bearish. If we can't, change this formation, it does not look super strong. And part of the challenge is that we're currently below our 20. So if our 20 is at 23,317, and yeah, so we'd have to come up another $150 in the next 30 minutes or whatever to reclaim that. Otherwise, the rules of a reverse cup and handle is that we would drop this dollar amount right here. So it'd be a $1,600 drop. A $1,600 drop from here would put us at 21,600 or something like that. You'd be down in here. And if that plays out, that's not pretty either, because we will most likely start the green zone in a candle. Yeah. Starting in an hour, we're going to probably flip to green. And if we publish a green candle and then we lose the 50, it flips from green to yellow, and that is very ugly. We do not want to be, it's just a pretty ugly thing if you go from green to yellow. So, yeah, wish I had better news, but if we can't hold this 20, and if we can't kind of have a leg up, then yeah, I mean, you just have to read the chart for what it is. So very interesting. We just got overextended. We're ranging, and now we're struggling. It looks like this death cross might be winning out, and we're gonna have to come back or consolidate or do something to regroup and try again. But I mean, does that all hinge on this one candle? I don't know. It's kind of rough to base your entire trade on one candle. The only thing that makes this candle special is that it is the monthly close. And although a month doesn't completely change all at once, because look, here's a wick from close to high. The difference is about $850. If we went up $850, that would be 24, and so there's a little wiggle room. These things, especially on the monthly, they're not, it's not just, to have the monthly high be the open and just go straight down is very unlikely. That is very unlikely. So we've got to range and do some things for a while, but you just need to kind of keep an eye on this. It's not, I'm not saying that everyone should just go short and completely change their portfolio. It is more of a, let's evaluate the risk of a downside. Is our position too big? Do we have, are we prepared for a drop? And if the drop happens, where would it likely go? I still do not believe that we'll break the 200-day. This is, yeah, I just don't see us, I don't really see us going below 20,000, to be honest. If we pull back, which would be fine, it will give us some footing, but it'd be worth running the numbers to say where would my portfolio be at these numbers, because it might fake us out. You know, we could come down, we could find support on the 50, and we could run. So if your portfolio is long and whatever, then awesome. Then you wouldn't really want to change a lot. What you really want to check is what happens if we drop to 21.6. Like, what happens at that point? Am I buried, or is this something I can handle? Is my leverage too high, or is whatever my situation? And just figure out what that question looks like, and then look at you know, 20,000. What if we drop to 20,000? Would that completely wreck us completely? So we just need to be in a place where we can handle these things. It doesn't mean that we have to make a knee-jerk reaction. I'm not a proponent of making quick decisions, but we need to be, you know, cognizant of different things here. The fact is, we have a resistance here that we broke, and then we dropped through it, and then we did come up, and this is a rejection. So I was really hoping to get above this blue line, and if we form even a small cup and handle, this is a pretty decent amount. Like, it could drop us down to here, in fact, right here. So we just have to be prepared for it. If your portfolio can handle being in the red for a little bit and it's not the end of the world, you know, it's hard to close off your long exposure unnecessarily. You know what I mean? But you'll have to be the decider on that. I'm just trying to kind of point out where the chart is and what I'm seeing. What I'm seeing is not super strong. If we were able to have a green day today and start testing this line or whatever, there would be a completely different sentiment. If we are closing at the bottom of this, where we've kind of erased all of our progress, yeah, it's not great. We have not touched the 50 though, so I do believe that if we do touch the 50, I don't think the very first touch will just explode down through it. I think we will probably find it as support. So in the really near term, I would expect that we'd get some bounce off of this, and it's at 22.6. So it's rising fast. We'll be at 22,750 or something very soon, in the next 30 minutes. So there's some things going on here. If you asked me about Ethereum, Ethereum looks pretty good. I mean, Ethereum is very close to recapturing its 20, and that number is 1614. That's only $5 away. So this could actually hold, and then we'd have another support. We are touching the 52 frequently, though. We're really playing with fire when we start hitting a support that many times. So it's all really hard to read right now. Like, there's no clear path on all of these. Ethereum, it just looks more bullish than Bitcoin, but they sure aren't going to act differently. If one goes down, the other's going to go down, and Bitcoin's probably going to drive. So yeah, it's hard to sit and view this as a separate market when you know that Bitcoin's doing its thing. So yeah, that's kind of where we're at. I was looking at, I haven't looked at this for a while. Let's see. It is this is our matcher. We haven't looked at this for a while because there has been no match that makes sense. And the variance has always been over 20%. Well, at yesterday's close, we finally did get a match that was close. So the scenario is June of 2020. And the reason this chart makes sense, let me move it up a teeny bit. Well, I'll actually show you. let's just go to June of 2020 on our chart, and we'll just kind of analyze it really quick. What I'm wanting you to look at is where is the 50, where's the 100, and where's the 200. So right now, our current scenario is that we've had a golden cross, and we currently have our 100 below our 200. So that's kind of the situation we are in the current market. And it's hard to find that same exact situation because here we had a golden cross here, and then we immediately lost it. So we actually didn't make it very far. So our 200 was above the 100, but we lost our 50 almost immediately. So this isn't a very great spot, but this June area of 2020 is a little closer. So I'll zoom in on this. We have our 50 up on top. We have the 200 above the 100. So that's our current scenario. We're about to cross though. The 100 is about to cross the 200. So we could be a little bit more in this area. As you can see on this chart, we did not touch the 50. So when we kind of came across here, we haven't touched the 50 here, we haven't touched the 50 here. We did touch it finally on this day. And the shape of the chart is not the same. There was a huge percent gain leading up into this move, but we had two drops instead of just the one that we've currently had. And the only one difference is that we did put in a higher high, so that's one thing that we have going for us on this chart, but we immediately lost it. So the shape of this isn't quite, you can tell that there's a difference in the emotions between these two charts. The excitement for sure. Of course, we were just bouncing off of the COVID crash, so there wasn't as much excitement as there is here, but it was definitely a move from the bottom, so there is that similarity. We did pull back and found a kind of a point where we've pulled back a bit. Then we put in a higher high. Right now, we've stayed above that high for an extended period of time, so there is a difference emotionally. But here, then we kind of ended up going sideways and ranging. And then we started off on our actual bull market. So this is probably the closest scenario that matches what we are, but there's some problems. We are going to, this just had a fake out. So we had a fake out golden cross, and then bear death cross, then golden cross. But the shape of the chart matches closer to the second one. I'll get us over to present day again. But tomorrow we're going to have a green zone. And green zone, this will be the first green zone that we have since this move here. And so there's definitely, there has been enough time in this move to get us there. Then if we have a one-day green zone and then we go from green to yellow, that's not going to be pretty because that's the time. Normally, the strategy is to go short when you go from green to yellow. So I would expect some downside. If we lose this 50, there's going to be some downside, and it's not going to be a couple of days, most likely. It's going to be probably a solid month. Whether we end up, ultimately ranging sideways after this or doing something different, that's completely in the cards. So it just depends on what your risk appetite is or what you can handle during whatever happens here. But we have a lot of strength because we have the 200 below us and we have an increasing 100. And if we lose the 50, we would definitely bounce off of the 100 and do something. And if the market is convinced that the bottom is in and we're starting to build momentum, pulling back and creating a higher low than this would definitely be, it would be very bullish long term. So from the long term and the kind of further, more zoomed out view of the market, I'm still bullish. I just don't know how this is going to impact us if we ended up losing the 50. Now, I'm just trying to give us all sides of this coin, but To be honest, I really don't know if we would lose the 50 on the very first touch. So I think there's time to see what will happen. But yeah, we're definitely losing the 20 today. 25 minutes, I don't see us gaining strength. I see us kind of losing strength. So that is definitely at play. Our 50 week is going to continue to drop, and whenever we retouch that, we're gonna be gaining some strength. If we hit 25,000, this whole thing's gonna change. Like, we're gonna be launching from there. So anyway, that's kind of what I'm reading right now in the charts. We're just at a really critical point. We did get too hot, and now this has made it very kind of difficult to read. The other thing that's happening, which could change the flavor of this whole thing. Let me go to I'm going to pull up the comparison between the S&P and Bitcoin. So the S&P closed at 21 UTC, so it closes here. And then we'll look at this. So you can see there was kind of a move up in the S&P this afternoon, and Bitcoin didn't really follow it very well. And then when S&P started dropping, Bitcoin started dropping pretty good. And Bitcoin actually looked a little stronger, but I think the percent drop was worse. So we're still following the S&P, and this is happening every day. There's generally a pretty close similarity between S&P and Bitcoin. And so with that information, it's kind of helpful to know what the S&P is doing to kind of help us know how Bitcoin may react over the near term. And today, after today's close, you might look at this and get depressed because we had this really kind of wild day where we opened above the 50 and then lost it by end of day. So that generally isn't great. But the definition of a swing low is that you have a low and a high on a candle that is lower than the low and highs on both of the other sides. You have two candles on either side, and it has to be lower than the low on these two candles and these two candles, and the high has to be lower than the highs of these two candles. So this Friday close, where we tagged support off of this line, and where I'm expecting this to be a change in movement on the S&P, this move here is now officially a swing low. So this is the definition of a swing low. We have a swing low in the books. We've got a low here with higher lows and highs on both sides. And so there is a stronger case that we are changing direction on the S&P. I know it doesn't feel like we're changing direction because we keep opening and closing lower. But the placement of these, we've been gapping up and then losing steam. And that's kind of how these things work. If you kind of zoom out, especially right here, when people are depressed, there's a lot of you might be well, maybe there's no great example, but you can see near the bottom a lot of the bodies we kind of sold off during the day. So when there's a lot of depression in the market, no matter where we open, it kind of bleeds off during the day. And then whenever there's a period of excitement, we're actually, the bodies are telling the story that we're buying throughout the day. Even if we open lower, we're buying through the day. We open lower, buying through the day. Open lower, buying through the day. And even kind of on the way down, just depending on the flavor, if you can tell there's some depression in the market, then you'll have these red candles, and then the green candles kind of buying through the day when people are getting excited again. Well, that really played out over here. We had a lot of green bodies because we had broken this resistance and everyone was all excited. And now you can see how many red bodies we've got. So even though the chart shape is changing, the intraday traders are pushing things down, but the overall sentiment is that we're starting to change. I expect this to continue. I expect the S&P to actually start moving out. And so we should see that this week. if this is gonna happen, it's probably gonna happen this week because we've already hit support on this. So it'll be very curious to see how this all plays out, because if the S&P starts a new leg upwards, then Bitcoin and Ethereum will likely follow. I mean, it would be very unusual if they didn't. And after a day where after 2 days where we've really bled off pretty hard, it makes it pretty hard for Bitcoin to stay green during the intradays. But this might just be, I might be just crying wolf for no reason, because if Ethereum, excuse me, if the S&P opens and starts really moving upwards, we could reclaim this 20, which would be insanely bullish. It would be so bullish if we reclaimed our 20, because our downward leg would start flattening out, and that means that there's a new leg to the upside coming up. And if we could do that, it would be, then we'd have another shot at actually moving up into higher ranges, which would be super bullish. On Bitcoin, it would be bullish, and on Ethereum, it would be even better, because we have kind of the support we need, and one more little move up to here would just launch us. So we're kind of in a critical place. It's really hard to read. I'm not sitting here saying, here's the most I mean, if this close, it looks like we're going to break down in isolation, but there's a story on both sides. So this is a very tight 50-50. It's not a 60-40 or a 70-30. This is really a 50-50. I really can't tell you whether it's going up or down right now. If we lose the 20 and start resisting it, that's, now we're getting to 60-40 land. If we lose the 50, it's like 70-30. So there's, when we get a few more days of information, we'll have a lot more, we'll be able to kind of see where to go from here. But for now, it's pretty hard to call, and that makes trading hard. At these times, you just have to evaluate, can I handle anything, and where are my limits? Where's my risk? Where's my exposure at today? And can I handle a worse case scenario? Okay, well, that's pretty much it. I'm looking forward to our live chat tomorrow, and I'll publish this and let you guys go. All right, see y'all. Thanks for making it to the end of my video. Make sure you keep those trades small. Don't force a trade. Don't get impatient. And if you want to see how all this works, please come over and check me out on the subscription channel at cryptoinfluencers.com. Again, the link is in the description.